So before we start, I want to show a little bit of basketball. Those who know me know it's my favorite game. So it's just half a minute. This is the game that took place 2 years ago. That was playoffs between Boston and Toronto. That was playoffs of 2020. Toronto was down 2-0, and we were, down by 2 points with less than a second left. So I don't know. Probably many people saw this game, but I still want to show it to you. It's going to be short. Let's see if it works.
On the ball, which I assume he will be to make the pass.
So half a second left. Boston brings the tallest player in the world. His name is Taco Fall. It's 2 meters 25 centimeters, or 7.5. In every playing minute of NBA, they just put it in front of Kyle Lowry to make sure he cannot inbound the ball. Let's take a look what happened. See how tall he is? It's going to be like Mia's double. Can you see? Sorry.
They're going to be switching everything back here. Marcus Smart's going to
So half a second left. Take a look.
coming to the ball.
Series on the line, and Anomi got it off.
So that was so amazing. It was so impressive. Now, some of you might be thinking, well, I came to learn about real estate. Why you show me basketball? Some of you probably thought I went out and, why you show me basketball? So, guys, you're in the right place, and I'm okay. But let me show it again. Okay, this time, I want to explain you why I'm showing this video, and I promise to connect it to the real estate. So, in a game of basketball, when a little bit of time left, the team that inbounds, there's only 5 seconds to inbound the ball. Okay, and the referees, they count. Now what happens, majority of people in the world are looking where the ball is. Did someone in this room look at somewhere else but not the ball when I showed it? 1, 2 people, right? So this time I want to do it again, but take a look not at the ball. I'm going to point to a player that did something unique.
On the ball, which I assume he will be to make the pass, very, very difficult.
At 7 feet 5 inches.
Yes, and he will be. He is going to guard
You okay?
the ball.
A little advance it here.
Kyle Lowry is going to have to inbound against Taco Fall.
Wow, Kyle Lowry at even 6 feet.
Just scary to look at him, right? How tall he is.
Going to zone up here.
Now, instead of looking at the ball,
They're going to be switching.
take a look at Anomi.
Marcus Smart's going to stay up high.
See, this is 5 seconds,
Coming to the ball.
and this is how the game is done.
And Anomi got it off.
Okay. So why I'm looking to that, why I'm showing you this. Here's the deal. Majority of people, when they look and talk about investing in real estate, they know only one thing, which is buying and probably selling at a profit, or just putting tenants in, right? And renting this out. So there is a misconception that the only way to make money in real estate is by doing it yourself. You don't need to do it. 90% of people anywhere else, they do it. And the reason we're here in this room, because I want to show you some other options. In fact, I think after the next 30 minutes where I'm going to show you, I believe you're going to be more educated about possibilities into real estate investing than 90-95% outside of this room. How about that? So, why invest passively in real estate? Well, there are several advantages. First of all, you can pool your money with other people, right? And that allows you to buy more projects or invest in more properties. The barrier to enter is typically lower. Like we were talking about the Toronto real estate today, or the prices are, I don't know, let's just say $1.5 million. If you want to buy, say, a condo, right? Not pre-construction, but a condo, and you need to put 20% down, it's just $300,000 just out of your pocket, right? You also need to get a mortgage, which in these cases you don't need to do. You get the improved property management. Think of if you rent the units, and the property management typically charges between 8 to 10%. So when you're part of the big group, typically the property management fee is much lower. And you get an access to professional investors. What you can invest in? You can invest in physical real estate, like the actual tangible properties, something we can touch. You can invest in mortgages. You can invest in land. You can also invest in development projects. So pretty much anything real estate, you can invest passively. Now, let's talk return on investment. Let me briefly go over the every option. I'm going to do it on a very, very high level. Okay, by the way, you can take notes if you want. To those who want, I'm going to send the slides. You don't need to memorize, but if you want to take notes, all good. So the first option is something called Real Estate Investment Trust, or REIT. Okay, REIT is pretty much a company, large company, that owns a portfolio of properties. The portfolio could consist of one type, could be REITs that just specialize in residential properties. There are some REITs that specialize, that just do a mix of everything, anything you can think of. The majority of income is being distributed to shareholders or unit holders. And some REITs, they actually distribute up to 90% of profit. So some do it on a quarterly basis, some do it on a monthly basis. Many REITs are public companies that trade on the stock market. What does it mean? It means that you can go to any broker, let's say, I don't know, New Wells, Questrade, and you can buy a share, 2 shares, 5 shares of any REIT, and you're going to become a real estate investor. It's very, very simple, very doable. You could do it online without leaving your office. So I did some research. Look, Ronnie said I'm doing research. So yeah, I did some, and I went on Wikipedia and I found a list of REITs in Canada. So this is the list. There's about 20 of them. Now, how do you see if this is a REIT? Typically, the extension after the name is going to be ./UN. Okay, that's how it's defined on the Toronto Stock Exchange. Now, here they say this is a list of public and private. On this list, I don't see any private. Now, I'm not sure if there are any private REITs left. All of these are public, but that's what we've got today. Ronnie, any private?
Yes.
Yeah? Maybe there's not on the list. Now, I mentioned that this is something that you can buy on the stock market. This is a share price, the 5 years of largest REIT that invests in retail plazas. It's called RioCan. Pretty much anywhere across Canada you go, you see their plazas. Okay, can anyone tell me what's wrong with this picture?
It's red.
Red, right? So yeah, 5 years ago, it shows the dividend here, 5.1%. Of course, it's called dividend yield. So, but my point is, you bought shares of RioCan 5 years ago, and they're worth today, 1880. This is as of this morning, prior to the stock market opening. Okay, so pretty much you lost more than 20%. Now, how can you lose 20% with what? No, I know, but I'm saying when you invested in anything real estate, because the value went up. So the problem with REITs, especially with the public REITs, is that they move along with the stock market. Could be good thing, could be bad thing. Now, the last year, the prices are going down, and it reflects into that. So if you do decide to invest in REITs, just understand that you're going to be impacted by the move of the stock market. Now, this is an index. So you have options. You can buy one REIT, right, specific one, the one you like, or you can buy even an ETF, an exchange-traded fund that invests in all REITs in Canada. So pretty much you diversify your portfolio, you spread your money. But again, similar to the graph I showed you before, it's also in red. It's 7% negative. Okay? So keep in mind, if this is the option you're going to select, it's going to move. There's advantages, disadvantages investing in the stock market, and I'm going to talk about that in a second, but just keep that in mind, because there is an impact of real estate plus where the market is going. Now, let's talk about the advantages of real estate. You? So advantages. The extremely low barrier to entry. Pretty much you can go buy one share of anything you want, $10, $12, $15, and you can be a real estate investor. Also, it's very liquid. So pretty much you can buy it and you can sell it in the next 30 minutes, right? If you want to. Offers great diversification. So you can buy, as I mentioned, you can buy any type of real estate you want. You can buy hotels, resident invest in hotels, industrial, residential. There's so many choices around. Provides monthly or quarterly income. Now, the income is not that high. If you're looking for 15, 18, 20%, the REITs are not going to provide it to you. but for conservative investors, it's a very good option. And it could be purchased inside the registered plan, RSP, and TFSA. Okay? You open a registered portfolio with the broker. This is how you buy the shares. The disadvantages. The unit price is impacted by the stock market. I mentioned a couple of times. Distributions are typically not high. Okay, so high single digits, that's what you might get. REITs are normally large and slow companies with big overhead. So understand that this is the companies that pretty much employ hundreds, if not thousands of employees. Somebody's got to pay for them. That's number one. Number two, when they find a deal, it takes so long to underwrite it. It might take months until they move. Okay? But as a conservative option, any of you can go and buy the REITs tomorrow morning if you want to. So this is option number one. And option number two is something called Mortgage Investment Corporation, or a MIC. Okay? Mortgage Investment Corporation is an investment company designed specifically for mortgages. So what this company do, they basically create a portfolio of various mortgages that they lend. So they raise money from people, and they use the funds to invest in different type of mortgages. Now the companies can invest in all type of loans. Could be some small residential loans, could be large commercial development mortgages. Okay? Whatever you like, whatever you feel, let's say you like the residential market. So you can decide on a MIC that invests in residential mortgages. If you like to be part of something big, commercial, hotels, whatever you want to do, that's the MIC that could be lending to those projects. The profits generated by MICs distributed to the shareholders according to the proportional interest. So like in any company, you got shareholders, or MICs could be unit holders, and the more units you own, the more profit are you going to get. So MICs also can be public or private, and the yield actually varies by the mortgage type. So I don't know if, most of you probably invested or at least know about the mortgages, but you can invest in the first mortgage or in second mortgage. Obviously, first position mortgage is more secure, but what you're going back on your loan, it's going to be a lower interest. With the second mortgage, obviously the interest is higher, but you're in second position, so there is more risk involved. Okay, so this is a picture I took from one of the MICs. As you can see, this MIC, they do land development, they do construction and mezzanine financing. I'm going to talk about mezzanine financing soon, so you'll know what it is. They do commercial and bridge financing, so construction, industrial, and also residential mortgages. So this type of MIC, they basically loan to anyone who comes to them. Just need money, come to me. I also mentioned that MICs could be private or public. So this is an example of a public MIC. It's called I forgot the name. Sorry, guys. I didn't put the name here. If you need, I'm going to add it to you. So again, same picture here. Because this is a public MIC, it moves along with the stock market. And since last August, stock market is not doing well. So this MIC is also losing money, as you can see. So if you invested in this MIC 5 years ago, you would be almost 14% in red. Now, this MIC compared to the previous REITs I showed you, the yield, the dividend yield is 8.5%. So pretty much it's a paper loss. If you buy and don't sell it, you're going to continue getting your income coming to you. I don't know if they pay quarterly or monthly, but it's going to continue. Just close your eyes, don't look at the share price or the unit price, but the income from the mortgages is going to come to you. Okay? This is an example of a private MIC, and because it's private, we don't advertise here anything. So I took out the name. So this is a Toronto-based company. Here, unlike the public one, where pretty much you can buy one share, here the minimum investment is $5,000. That allows you to buy one share. They target to give you back 8% annual return. Okay? But the redemption, unlike stock market when you can do it in 5 minutes, here they request 60 days. Okay? So it's not that liquid, but it's pretty fast compared to some projects, real estate projects. So as you can see, they invest mainly in Ontario. 83% is in GTA, 7% is Southwestern Ontario, and 10% Eastern Ontario. And this is how they break down the mortgages. Now, if you look here, the dividend rate is 6 point something, and total you're going to get 8% from the money you invest. Now understand, this is not guarantee. Mortgages still have some risk, some element of risk. So understand this is an investment that might work, might not work. But 8%, if you just buy shares or units of the SMIC, that's what you're going to get. So mix advantages and disadvantages. Extremely low barrier. Like you saw, I don't know, $13 a share or $5,000. It's very liquid, especially if it's public. Offers great diversification. So if you invest in real estate, you may want to get into mortgages, or vice versa. Provides monthly or quarterly income, can be purchased inside the registered plan. Again, that's a beauty that we've got in Canada. You can get your income and do not pay income tax on that until you take your RSP out. Disadvantages. The unit price is impacted by stock market, similar to REITs. Real estate market downturn and default on mortgages. This is what's going to happen now. Understand, 8% is good, but it's on paper. Anything can happen. Some people are going to default on mortgages. Some mix are going to suffer, especially those who invest in second mortgages, right? High loan-to-value rate. So just keep that in mind. Geographical concentration. As I showed you a MIC from the slide before, all they do is investing in southwestern Ontario, right? So if this region suffers, they're going to suffer as well. And the last one is the price sensitivity to yield. So the interest now going up, and typically that's going to impact mix. When the rates are going to go down, it's much better for the mix. Okay? So that's an option number 2. A little spin-off from investing in mix, you can invest in private mortgages. Okay? Normally, you can find those mortgages. The mortgage brokers offer that option, right? You can work with them. However, unlike investing in MIC, you need to find the borrowers on your own. And you're also responsible for doing the due diligence. Nobody's going to do it for you. You get the deal, you need to analyze. So just last night, I got a deal. Invest in mortgage with us. So I look into that. Obviously, I'm not going to invest because I invest in my own projects, but I got curious. So the guy is offering 15.75%. I said, wow, it's good. Now, then I look at the location, tiny town in Nova Scotia. I said, not so good. But then he said it's first mortgage. I said, wow, almost 16% first mortgage. I said, well, that's good. But then he said, well, we're going to go 100% loan to value. Meaning, from the purchase price, he's looking to raise 100%. I said, this is not good. But then he said, I'm going to give you personal guarantee. I said, well, this is good, right? And the last one, the guy says, well, I don't invest my own money in the project. So I said, this is not good. So is it good, not good? I don't know. It's really up to you to decide. And again, nobody is going to do this work for you. So it's a spin-off. You can do it. But it's not really a passive investment. You need to do the work, the legwork. Okay? Syndication. So this is an option number 3. Now, before I move forward, this is what Ronnie and I do. So for the disclosure, not soliciting, not selling anything, but I'm going to show a couple of examples from what we do because it's just convenient, okay? Are we cool?
Cool.
Yes. Cool. So syndication. Typically, if you want to buy a large property or invest in a large project, normally one person is not enough. So somebody, we call them project sponsor, they need to bring a group of people, group of investors together, and those people together put the money in the same deal. So this is called syndication. Okay? A single person or company organizes syndication, manages on behalf of the investors. So we call that the project sponsor or general partner. Profit distribution are made to investors based on their ownership of the entity. So let's say there is a project that requires $1 million. So somebody who's going to put $50,000 in the project is going to own 5% of that company. Somebody who puts $100,000 is going to own 10% of that company. So it's a proportional according to the amount that is needed and the amount that was raised. So to those who want to see how it's work or the structure, typically there's a project, there's a company, I put limited partnership, it could be any probably type of company here. There's a general partner, so this is a person that organizes the project, and there's multiple, I'll just put 3, but there's multiple people that invest passively. They're called limited partners. Okay? this is the typical structure. For the US, and Ronnie mentioned several projects in the US. In the US, they often use LLCs, which is, stands for Limited Liability Corporation. We don't use them in Canada, and it's not recommended for Canadians who invest in the US. It's a different topic. I'm not going to touch base on that. But if you ever decide to invest in a project in the US and you see LLC, just let at least you're aware what definition is. So in LLC or limited liability company, instead of the general partner, you've got the manager member, and all people are called members of the company. So they buy the shares of the LLC. Now, this is an example of a project that we exited last year. It's called White Tanks. I'm showing it as an example what syndication is and pretty much what you can do with that. So this slide is taken from the investors package that was created in 2021. As you can see, we bought this land. It's actually 2020. We did it during the pandemic. And we closed on that December 29, 2 days prior to New Year's. Never again, right? So, but here's what I wanted to show you. And this is the potential of such deals. So the purchase price of that deal was less than $6 million, okay? And the idea was to buy a piece of land and to build a community. And the developer got an offer to sell to another developer. He sold it for $12 million, 8 months after. Is it a good month for that day? What do you think, guys, right? So he made a nice amount of money. Our investors did well, okay? And again, I'm showing you this example as just to let you to be aware of what's possible. And if you think sometimes things are too good to be true, sometimes they are. But sometimes somebody is going to make those $5-6 million. It wasn't us, by the way.